Okay, oh, blimey. Welcome everyone. My name is John McDonnell. I'm the Labour MP for Hayes and Harlington. My main role in life is booking rooms in the House of Commons for various organisations, and we've got a couple going on at the moment where it's all kicking off, which is quite interesting. We launched a project during the COVID period called Claim the Future. It was a group of people coming together, largely people who I'd worked with when I was Shadow Chancellor, and then prior to that as well on different campaigns. And the idea was just to ensure we kept a network together of people, researchers, policy researchers and campaigners talking and discussing with each other about the sort of transformative change that we needed within our society. And the purpose was a traditional praxis, really, trying to ensure that the development of theory was linked to practice. So the idea of policy researchers and campaigners coming together was absolutely critical. And we produced a number of reports and then did an overall report as well about a number of issues about how we want to reshape society and how those campaigns could help and how we could mutually reinforce the work. Alongside that, some of you may know, over the last God knows how many years, I also used to run a thing called the People's Parliament, where we literally booked a room here, invited someone who had an interesting things to say, and invited people along. And the bizarre thing was, every session was packed out like this, so it just gave people the opportunity of discussing issues of interest, but of also purpose. So we've relaunched that from the Claim the Future project. We've relaunched that, and we're calling it the New Thinking series. And the idea is to bring people along who want to talk about a specific issue that affects all our lives and about the sort of change that needs to be brought about. Okay, so that's the purpose of these meetings. I have to say, I've found everyone we've done so far incredibly stimulating, and that might reflect the bankruptcy of political ideas elsewhere and the absolute sheer boredom I have with the political debates in this place as well. So tonight, I think you'll find it equally interesting. But the key issue then is, having been interested and stimulated, what do we then do about it? Okay, let me now pass over to the chair.
Thank you very much. Thank you. Thank you very much for coming. Very, very happy to see so many familiar faces from Cybersalon, from Positive Money, from Claim the Future, as well as other organizations. So my name is Eva Pascoe. I'm the chair of Cybersalon. We were very, very happy to co-organize the event today. As John mentioned, the topics are about issues of every day, and money is the most important issue of every day at the moment, particularly because everything is getting more and more expensive. So we've been looking at new money and creating a better approach to managing finance for more equitable society. For quite a few years with Cybersalon, we actually produced a book last year called 22 Ideas About the Future, which has got a big section on future of money. And we prolonged that for another couple of years because it looks that money is actually right at the center of the story. And as not much was happening since about 2013, when Bank of England produced new polymer money versus paper money, that was the biggest exciting thing that happened in Bank of England over 50 years. But once they spent all this money on this polymer, it turned out that the demand for cash was actually started diminishing. So 250 million pounds later, we have another problem. What do we do now? And that's the topic of the conversation today, because part of that change and part of the migration of how do we use money is the idea of central bank digital currency. So we have fantastic speakers today. I'm absolutely delighted to have Iza Kaminska, who is ex-Reuters, ex-many things, including FT, wrote Alphaville column for many years, and has got very, very in-depth view on CBDCs, having penned 10,000 words review of it, which I read in great details, and it's very interesting. It's on our reference for people who want to read through it. We have Youel from Positive Money, who has been on many barricades since a very tender age. So he's a thinker as well as activist and not worried about getting arrested 2 times here and there. So very much sort of, shaking the place up type. And obviously Brett Scott, who we know quite well. We've had him on the previous Cybersalon back in 2013 talking about cryptocurrency. And Brett has penned out a fantastic book called Cloud Money, investigating what big tech is doing to digital, and his view we will hear in a minute, but it's quite controversial. So we will do a little bit of an intro from each of the speakers, but I just wanted to mention one thing. As you hear from my accent, I'm Polish. I've been here since 1986, so I earned my stripes as a Londoner. But before I got here, Poland was in a big crisis, and money was in a big crisis, i.e. there was more money than goods. So the government printed money, but they were not able to produce enough. And at some point, we had to pay with things like tithes, and I stopped it. And it got so ridiculous that this is a packet of 3, and it was different than a packet of 2, because that's how you needed to do granular exchanges. So it was completely barter, but it was going 1 pence, 3 pence, 5 pence, 10 pence. So this was the money as I was probably about 18. So, nothing surprised me from then, and I found myself paying in various currencies around the world. But the point is that, money does change. Sometimes it's tithes, very sexy. Sometimes it's cryptocurrency, a little bit less sexy, but it does migrate. So today is about, keeping our options open, and from stocking sites to crypto to CBDCs, I think we want to open up the pros, cons, and see what's in it for us, and how can we make more equitable society. So if I can pass on to Brett first.
Sure thing. Thank you so much. I guess in 2013, my first book had come out, which is The Heretic's Guide to Global Finance, Hacking the Future of Money. And that book came out of the fact that I'd gone and worked in the financial sector, and I'd worked as a over-the-counter derivatives broker, basically large-scale bets upon things in the economy. But I'd come from quite a left-wing background, so it was an interesting sort of hybridization process where I was sort of bringing in sort of building up financial knowledge with a kind of left-wing perspective. That led me to write this book, The Heretic's Guide to Global Finance, which was about how do you understand the financial sector, take on the financial sector, and maybe even rewire it and build new types of finance. But I also come from an economic anthropology background, and actually economic anthropology historically is much more interested in how monetary systems work. Economists have a particularly bad problem of just assuming that money exists and it sort of naturally emerges actually from barter. Interestingly, if you're in a monetary economy and the monetary system somehow goes, actually barter does get invented, but it's only after you already have a monetary system. But that's too deep a topic for tonight. My latest book actually comes out of my old book, because once I wrote The Heretic's Guide to Global Finance, it came out in 2013, and at that time the banking sector had a very bad public image, and the tech sector at that time didn't. The tech sector, people still thought the tech sector wasn't evil at that point. All right, it still had this kind of glow about it. And a lot of tech people came to me and said, we also do alternative finance. We're also interested in democratizing the financial sector. And there was all this narrative around fintech being the kind of like future of finance and so on. So I was quite involved in sort of those types of circles for a while, but it very quickly became apparent to me that the fintech sector basically specialized in taking the exact same financial sector and automating it, okay? Which is pretty bog standard in the history of capitalism, right? You automate stuff, all right? So they were taking anything that hadn't been automated in finance yet and automating it. And that's basically fintech for you, all right? Now, in the realm of money, this played out with these debates around cash versus digital money. And this is what I became very interested in writing about, and I started delving into the perceptions around cashless society and how it worked and why it was happening and so on. And this has led to my latest book, Cloud Money, which is actually a defense of physical cash in the face of the growing fusion between big finance and big tech. Now, one of the biggest problems we face in society right now is, I've got a kind of a crack acronym for it, which is the ATOMI, the one type of money illusion, all right? Which is people think that there's one type of money in our monetary system, right? But it comes in different forms. A bit like if you were to imagine like an old piano versus an electric piano. They're both pianos. One is like slightly easier to carry around, all right? Or an acoustic guitar versus an electric guitar. The same thing in a different form. People think that the monetary system is a bit like this. They're like, there's a single British pound, and it comes in a physical form, which is cash, and then there's the digital form, which is like my contactless card. But it's basically the same thing. And within that, there's a kind of mentality which says the digital version is an upgrade to the physical version, okay? Now this, if you zoom out broader, plays into a broader ideology in society, which is this kind of digital everything ideology, which is this idea that what progress means is to get ever more scale, speed, automation via digital technology, which goes across the board, across the world, all right? So this whole idea of digital money being an upgrade to cash is set within this broader kind of idea that digital transformation is a sort of natural progress in society. Now, the best way to sort of get past this, and this will help us to understand the CBDC debates, is to realize that actually the monetary system is a composite system with multiple layers of money issued out by multiple different issuers in different forms, okay? The best metaphor to grasp, if you want to just quickly understand this, is to think about casinos, all right? So if I go to a casino and I take some cash, state-issued money in physical form, and I hand it over to the casino, they give me chips in return. Those chips are a secondary form of privately issued money that can be used within the casino, okay? Now imagine that you implement those chips in digital form rather than physical form. It would be a secondary form of privately issued money in digital form. This is basically the banking sector. The banking sector issues a secondary type of money in digital form. So all those like cards and apps that you have and all the little units you see in your bank account, they're not state-issued money, they're bank-issued money in physical form. So you can think about them as digital casino chips issued by Barclays, for example. They get called the same thing, they get called pounds, all right? But in reality, they are secondary promises for primary pounds, okay? And what was called the cashless society is basically a situation where you become dependent upon these secondary form of money. Now, my book, Cloud Money, is looking at the politics of that battle between those two forms of money, all right? And there's many, many different things, and we don't have time to go into all of them. But one of the big things you automatically realize that if you use this casino chip metaphor, it's actually public confidence in privately issued money is predicated upon the belief that it can be redeemed back for public money. Much like if you hold a casino chip and suddenly the casino says, actually, we're not going to allow you to redeem it, you would suddenly wonder what this chip is, all right? It's just a piece of thing issued to me by a casino, but it has no redeemability. There's a similar thing in the banking sector. All central bankers know this, that actually public confidence in these digital systems is predicated at some level upon the public believing they can redeem it back for state-issued money, okay? And this is one important thing to realize in this debate. Now, how much time do I have? 5 minutes?
5 minutes, yes.
Okay. One of the crucial things about the second type of money that issued out by banks, and Simon will know very well about this, because positive money, Simon's organization, was at the forefront of raising awareness about this, is that the banking sector has the ability to issue far more of these digital chips, digital casino chips, out into society than they have in state money reserves. And this is called credit creation of money. Sometimes it used to be called fractional reserve banking. But basically, it grants the banking sector a huge amount of power to mobilize whole sections of the economy or shut sections of the economy down that they don't like. All right? And there's also political activism around the fact that banks have this ability to do this. And many of the original monetary reformers were concerned about this, and positive money was founded on that. But it's politically very, very difficult to launch an attack against the banking sector and say you're not allowed to issue these second-tier digital casino chips. And so there's an interesting thing happened around 2015, I guess, or so, where some monetary reformers started to think about the fact that one way you might be able to reduce the power of the banking sector, all right, which is a political goal, was to issue a competing form of digital cash, as it were, all right, something that would enable people to bypass the normal digital bank accounts of the banking sector, because the traditional balance of power was between physical cash and digital bank money. So the idea was, if you issued a form of digital state money, it might start to essentially erode the power of the banking sector and potentially provide some kind of public fight against the banking sector. And this was the original type of CBDC proposals. All right, so actually there's a whole sort of political precedent to the CBDC proposals that predates the current debate. The current debate, however, is different. The current debate comes out of the fact that during the pandemic, there was a massive reduction in cash usage, which in my book, I go into the whole history of the erosion of the cash system through many different players who've been actively trying to undermine public confidence in it for a long time. But during the pandemic, that was accelerated. And suddenly central bankers were like, hey, shit, we have a problem. There's a potential serious financial stability problem here if people can't get access to public money. Now, in the context of the overarching digital transition kind of ideology, the first thing that kind of comes into the minds of central bankers is maybe we issue this new form of digital money as a replacement for cash or some kind of alternative for cash for financial stability reasons. All right, and one of the big problems they immediately faced is the fact that the original CBDC proposals actually were about kneecapping the banking sector, and most central bankers do not want to do that because they like to support the banking sector. So what you'll see in CBDC debates right now is they will be deliberately trying to water them down, all right, because they're stuck in this position where they're concerned about financial stability due to the lack of the drop in the cash system, but don't want to destroy the banking sector. Okay. Now, the final thing I'll say is that there's a new dynamic to this as well, which is that the digital transition agenda, which is a transnational kind of ideology, as it were, is increasingly starting to dovetail with a different agenda, which is the green transition agenda. Now, the digital transition comes out of bog standard capitalism, all right? Capitalists love to automate things, all right? They love to accelerate things. You want the economy to expand ever more, all right? So the digital transition thing is all about accelerating stuff. The green transition, by contrast, often goes against the growth agenda. It actually has a different sort of quality to it. But through relentless campaigning over many decades, people have, climate campaigners and so on, have managed to get the green agenda into public debate. So now, if you go into any mainstream forum now, every single policymaker will talk about digital transition and green transition. What this has now done is that it's created a whole new cadre of people from the political right who are starting to perceive CBDC in a totally different light. They're starting to perceive CBDC as being something about woke environmental authoritarians who want to use digital money to make sure that you buy vegan sausages, essentially. All right? And this is the whole kind of like a great reset type of thinking that's emerging in the sort of the right-wing part of the political spectrum. So we're actually starting to see these interesting different versions of the CBDC debate emerging, which is the original kind of like kneecap the banking sector version. There's the sort of watered down centrist version, and then there's a kind of slightly dystopian sort of populist right-wing version of the debate. And I'm going to leave it there, and yeah.
Wow.
That was a real tour de force. Very, very, very well put. Thank you very much for sketching it out. It's really interesting to hear your approach to it, because I'm a payment nerd. So I co-founded the first internet cafe in the world back in the mid-90s, and I probably implemented the first digital payment on the high street, because I was bored going around with £1.50 people paying me for email half-an-hour access, and I was like, there's got to be a better way. So I did the automation to help myself, not to do anything terrible, but to help us not to have to deal with the cash. And you know what happened? My costs dropped by 10%, because taking cash out of my little bunch of cafes was actually significant. I didn't have to worry about it, I didn't have to cash it, I didn't have to go to the bank. So I'm kind of like, right, interesting. And then I started reading about labor history of things like Gyrobank. And Gyrobank, for those, many of you will know obviously, but that was an amazingly innovative invention, like absolutely 10 times as more exciting as what we're trying to do today. Because Gyrobank was proposed by Wilson and was entered through the Act of Parliament about 1968, and it was the first computerized bank with no bits of paper in it. So everybody around the world was like, wow, these Brits are mad. But it worked, the cybersecurity worked, and it was used for many, many years successfully as a bank which was run by sort of a combo of post office and a bit of Bank of England, but it was definitely run for the people. It was used for providing banking to the unbanked. It was used for providing banking to the working classes because at that time, banks were really only for middle class, because it was seen as that's where the money was. So Gyro was a really inventive thing. And also, from my tech friends, it was the first bank that used optical character recognition, which was just the coolest. Everybody thought it was like Jedi magic. So it was a very successful development. It used post office for many years, and it got so good that the owners decided that, oh, this is valuable, let's sell it. Yeah. So it was privatized quite recently, which is a great shame, because that was the infrastructure that we really are talking about today. Britain has got really very innovative background in doing funky things with money. We just sort of not really deliver the bit for the more equitable society. That somehow gets washed out and disappears. So it's really an opportunity to refresh, if this is an opportunity to do something different. But on that point, I would like to pass on to Iza. Iza has been covering the CBDCs probably longer than anybody else, way before people thought it actually might happen. So, yes, so over to you.
I actually want to start by asking you a question. So what happened to the gyro after it got privatized?
It's part of Alliance and Leicester something. It basically got swallowed by current, and now it's owned by Santander. So I still know people who work there, but it's not what it used to be.
Right. It's interesting to me, like whether it was able to survive privatization, or it was still like to what degree was the government's role in the gyro?
Very diminished.
Yeah, well, exactly. So I'm just, that's the same. So yes, I'm Eva Kaminska, and I'm a journalist, and I guess I don't know, thinker, etc., columnist. I've been very interested in this subject for a very long time. I started off by covering Bitcoin, and this was in 2012. I think we first wrote about it, very early days. If I bought it then, I'd be not here. You're in Ireland somewhere. But no, I never did. I never did because I didn't believe in conflicts of interest, right? I know you didn't either. What I was going to say is that pretty much what Brett said, I completely agree with his take. I think it was a very good overview. This idea of a hierarchy of money is exactly right. And this is lost on the vast majority of the population who sees it as a single sort of unit, but in reality we do live in this world of many different monies, and we forget that. We also forget that when we put our money in the bank, we are creditors to that bank, and therefore, there is a risk in doing so. Of course, over years, insurance, there's a form of insurance that was created, a guarantee, which was supposed to keep the sort of panic that we saw most recently in Silicon Valley Bank and in Credit Suisse, that was supposed to keep it at bay, because the idea is that the government sort of guarantees the deposits, then there isn't any reason to flee the banking sector. But of course, the question now is to what degree should that guarantee be provided by the government, because it turns out the amount that is different jurisdictions have different levels and they divide how they pay for it in different ways, but it seems that it's insufficient, right? CBDCs come along into that framework. So at the moment we have all this panic. CBDCs sound like a great option in that world, because suddenly there is a fully guaranteed money out there that you can go into at any time. And one of the long-standing arguments, that was made in favour of CBDCs has always been this idea that you can take your money out of a collapsing bank and put it very quickly into a government de facto security, which in many ways operates like a gyro bank. But I think we've also seen the downside of that now, which is that this frictionless world is in a weird way creating instability. So be careful what you wish for is something to keep in mind. We've spent so much time thinking about how to make systems frictionless I'm of the opinion that the next big innovation in tech will be about how we bring all those frictions back. So I guess the key question we were going to discuss is whether CBDCs are a form of emancipation or panopticon in disguise, a technological panopticon. I went to UCL, so I'm very familiar with that, Jeremy Bentham being a key UCL man. I sit definitely on the panopticon side. I'm a bit scared of what the power of the CBDC can unleash in terms of surveillance. The counter argument is that, well, the private sector is doing it anyway, so we need, as Brett very articulately explained, we need some sort of pushback, a public money that fights for us and keeps us protected. But I worry that it can totally crowd out the private sector. And my optimal kind of worldview is a marketplace where there are many different options, and that as a consumer, I can always choose between them. And therefore, I'm not, whereas I was very critical of Bitcoin in the old days, I'm now more, I've settled into the idea that it's probably a good idea that it's out there, because as with any system that runs the risk of becoming totalitarian needs a challenger in the system. And so Bitcoin mostly is useless, but if it's there when, if for some weird reason we get, taken over by a fascist government or whatever, it's good to have a backup, is my point. So CBDCs are coming into the mix within that framework, and they are the counter. So if you get like too much private sector control, then yes, I think generally speaking, it's not a bad idea to have a CBDC out there. But as the FT recently put very eloquently, after years of me making the same point there, it's still ultimately a solution looking for a problem. I kind of think that by and large, there's no real reason for a CBDC. The two key reasons that are given are to do with reducing the cost of payments and some other sort of ambiguous ones that I've never really understood. On the cost of payment side, I think it's very interesting what's happening in Europe now. So one of the most advanced digital kind of CBDC projects is the digital euro, and in Brussels, obviously, they love to talk about everything for a long time, but every decision that happens behind closed doors in terms of how the structure is worked out. And I'm at Politico now, so I get to see the insides of Brussels like I never used to. And it turns out that actually the way people have realized somebody's going to have to pay for a CBDC. It's not cheap. It's not free. And this idea that it can sort of come into the marketplace as a substitute for cash and offer consumers a better deal is not necessarily guaranteed, because CBDCs still need to operate on servers, they still need to have customer services, they still have to have all these operational costs. And the bureaucrats in Brussels have kind of realized this, and it's quite ironic, I think, that they are now discussing whether they should force merchants to pay for the CBDC costs, because somebody has to pay for it. And there's only so much that can be paid for with what is known as seniorage, which is the kind of, Brett would probably explain that better than me, but sort of the magical amount of money that the government prints out of, the face value of a note when it's printed creates a sort of seniorage, which is a de facto delayed inflation, which can fund your money printing, essentially. So anything that you put on top of a note that goes above that value is a sort of windfall that you can take. But seniorage is harder to depend on in an inflationary environment, and I think this is one of the issues the Europeans are maybe belatedly realizing. And so this debate about who will pay for the CBDC comes into play. And then the second conversation comes in, which is, well, if the merchants are going to have to pay for it, and we already cap by regulatory decree how much the credit card companies can charge in Europe for payments. Should we also apply a cap? But if they apply a cap, then there's a potential unknown element that has to be funded by someone and has to become a liability for the government, or some sort of government, which obviously is a very complicated situation. So it's not that simple, is my point, and somebody will have to pay for it. And the other thing the Europeans are discussing is whether or not they should mandate it. And of course, once you start to mandate a CBDC, it becomes increasingly kind of, we start to run into this idea of, do the people really want it, or is it something that's being imposed? Obviously, the euro was mandated itself, so that's not necessarily breaking from tradition. But when I was looking at the documentation that was linked to us, I did find it interesting that when you actually unpick the two main reasons they give for going ahead with the digital euro, they come up with the two problem drivers that we've identified. The first is central bank money in physical form, cash, cannot address the needs of a rapidly digitalizing economy, which is kind of what Brett was saying. In e-commerce and for innovative payments that meet the future needs of Industry 4.0, right? So this is their main reason. This is debatable if the costs of CBDC are actually much higher than we appreciate. But the second problem that they want to solve is third country CBDCs and other innovative means of payment, i.e. stablecoins, not denominated in euro, may reduce the role of the euro, which I think gets to the heart of the panic about CBDCs in government, which is this idea that if we don't do it, somebody else will do it, and they will encroach on our monetary sovereignty. And this is when you start to think about the Ecuadors in this world that operate on a dollarized system. They're very much upset. They have no monetary sovereignty. And I guess from the perspective of the British, the Europeans, what we don't want is for the Chinese yuan to come in as a CBDC, and for Chinese tourists, for example, to go to Chinese shops here and use that as a means of payment without touching the sterling system at all. Because once you get into that sort of world, it's very hard to tax it. So that would be, and also drawing on what Eva was saying, or Eva, as we say in Polish, was saying about the communist system, it creates a sort of challenger black market economy, where the equivalent in communist times was the dollar markets, which were also traded under the counter, and that was a real way you would get goods. So in an inflationary environment, if you start thinking of sort of Chinese resellers giving you discounts if you pay for things in yuan, that suddenly seems very threatening to the established sort of system and the government. So that is one of the panic points in the government arena. And the other one is obviously, as Brett has already alluded to, so I shall come to it now, the challenge from the tech space. Because if it's not sovereignty being undermined by another sovereign nation, it's the idea of Elon Musk coming in and everyone having to take Elon coin just to get access to his Starlink and Twitter, right? So I have some sympathy for this idea that there should be a CBDC challenger, but I'm worried about it becoming overly kind of dominant in the system, and the best solution is one where there are many different mechanisms.
Right.
Yeah, thanks everyone. I agree with a lot of what's been said already, and some of the best points I think have already been covered. So I'm quite lucky to be going now, so I don't have to do all that hard work of explaining how the monetary system works. But yeah, I mean, to touch on what other people have already said, I think, yeah, given the history of digital money and the idea. I mean, I hesitate to call it CBDC, a central bank digital currency. I prefer to use the term digital public money because I think that's really what the core of this debate is. It's a debate over whether the public should have access to publicly issued money. But I still just find it amazing that this is being debated by central bank chiefs and politicians, prime ministers, and has also become a bit of a conspiracy theory for people on the political right as well. When it's an idea that, as Brett was saying just a few years ago, no one really interested in. It was just niche people like myself who were trying to promote it, and to suddenly be find out I'm part of this globalist conspiracy to enslave humanity is interesting. So anyway, I think just to reiterate, the debate is about whether the public should have access to publicly issued money or whether we should only have privately issued money. So I believe that public money is a public good and it shouldn't be surrendered to private interests. So I fully support the campaign for cash. I want to keep cash for as much as possible. I love being able to use cash, and as it is a form of public money, I don't need to use a bank or an intermediary for that. But it is increasingly hard to use. Because of this war on cash, which Brett has talked about a lot. Many retailers are no longer accepting it. And if I want to make online payments, I'm not able to do cash. I have to rely on a bank account. So without cash or the ability to use cash, we're essentially forced to lend our money to banks in order to access digital payments. And I don't necessarily think that's a good thing. I think really what we're doing is we're privatising the system if we no longer have cash in either physical or digital form. And I think rather than the onus being on people to explain what we need to why we need a CBDC, I think the question should be put: why do we need to privatise the monetary system? Why do we need private banks when who have exclusive access to the central bank's balance sheet, where we could just pass the line, pass out a middleman, and all have access to the same access to publicly issued digital money? Because banks already have a public version of digital money, central bank reserves. What a CBDC would do would be to open that up to everyone. And I think the ability to make payments and the provision of credit is a utility that we all rely on. But at the moment, we've essentially outsourced that to private shareholder-owned, profit-maximising banks who don't really use that power very responsibly. I don't think if you think of money as a public utility in the same way as water, electricity, telecoms, things that we all rely on as a public goods, would we have this same kind of excess in the sector that we have in the financial sector, where on top of these public goods they've managed to build hugely lucrative models which are enriching a very few people at the expense of everyone else and destroying the planet? I like to think if we were starting from what works practically, this wouldn't be the system we have. Privatisations haven't gone very well, so I'm worried about whether we do the same to the monetary system. And it's great people mention a gyro bank, because I think a gyro bank is maybe a good way of explaining what a CBDC would look like. The gyro bank was a public bank, as Eva says. It actually arose from the trade union movement as a key demand in the early 20th and late 19th century, based on the fact that working people didn't have fair access to banking services. And so it was a key demand up until the Wilson government. It was finally introduced in the 1960s. Tony Benn was the minister for it. He wanted to turn it into a genuine people's bank, which not only offered banking services to people for free. It was the first bank to offer free current accounts and to offer digitalised systems, which is one of the reasons we have free current accounts today, because we had a public institution competing with the private sector and offering that public option for free, which I think is what we could get today with a central bank digital currency, because I think that the issue is we don't have much consumer choice in that the banking system is very much not competitive. We're essentially forced to lend our money to a handful of huge shareholder banks who don't redistribute their fair share back to people. their customers. And the huge profits banks make are based on the fact that money is publicly underwritten by the state. So what I would want to see is, similar to Tony Benn's vision of a people's bank, in that we have access to a public payment system, a digital one, but also on the liability side of this bank, or the central bank, we have this money similar to cash issued by a public institution. But on the asset side, we also have, either that money could then be reinvested and be circulated back to the banking system, if your worry is that we need to maintain the banking system, or the money that we deposited with the central bank could essentially be recycled into, potentially, in my view, I think it should be a decentralised public bank, which would then lend to communities and have democratic control over what the money is invested in. You can have, councils and local government leaders deciding on how to do their own green new deals and invest in social housing, things like that. It's interesting, I don't know how long I've got, but couple of minutes. So I might try and respond to some of the things that Iza was saying. So I read that FT article this morning, actually, and I think that point that was being made about retailers having to pay for it wasn't being talked about by the bureaucrats or policymakers themselves, and that was a position from the banking lobby in Europe, who want to pass the cost of the banking system onto retailers and the public, which is what we already have. Do you remember when we used to have to pay to use cards? 50p, because that would cover the costs. Today, those costs go into higher prices. So I think it's a major win for the card companies and the banking system that they managed to get that giveaway. And on how we would pay for it, seniorage, isn't insubstantial. So, if you did some maths, you'd work out that 20%, if 20% of us went to a CBDC, that would generate about £9 billion in seniorage, which would be more than enough, I think, to operate a payment system, even have some nice profit in there. So, yeah, I think the case for me is overwhelming. In terms of, I don't see a convincing case of why we need to privatise the system when we should be handing over more power, more money to people who are going to make profits to the few, whereas we have an opportunity to build a financial system for the many. And yeah, I look forward to hearing people's thoughts and having further discussion on it there.
Okay, brilliant. We will take some questions from the floor. Just one thing to summarize, I think one thing we're missing here, one of the reasons why the Europeans are so terribly keen on proceeding is they had a massive corruption over COVID, and I think massive. We had big one, but they had proper one. And they worried about it because there is very hard to maintain control over the situation like that without strong financial state. And even here, there were issues with, what was it, the Queen of Lingerie, Michelle Mona, running away with dozens of millions, and still nobody knows who it is. I mean, we have just as much corruption. And I think that corruption is something that is not being addressed. CBDCs have got one way of addressing it because it flush out a lot of it. And I'm surprised people don't make more noise about it. Okay, so we take the questions. So I think there was a question there, yeah.
Hi, thank you. I think it's been a really interesting conversation. I wanted to ask how much money is spent every year on printing cash and how much we saved if Bank of England issued digital money instead?
Yeah, I might know some of the answers. Good.
I don't know the numbers, but the politics of this, though, is that there's a cost of cash debate, all right, which a lot of digital payments industry people will use to try and, as one of their attacks on the cash system. They say the fixed infrastructure required for cash is much higher than the digital infrastructures, which may or may not be true, all right? But what they will often neglect to mention is all the social costs that emerge when you destroy the cash system, all right? So, for example, massive exclusion, massive surveillance problems, huge resilience problems in your system, mass passing of power to a private sector oligopoly. Indebtedness, for example. One of the big things that digital payments companies use when they're marketing digital payments is the fact that people spend 20 to 40% more with digital payments than they do with cash. All right, so you have all these social issues that emerge from digital systems, which don't have a monetary cost per se, but they are costs to society. Right. The other important thing to bear in mind with these costs of cash debates is that, going back to that casino chip metaphor I used, those cheap digital systems only have public confidence because they're underpinned by these public systems. All right. So it's a kind of a false dichotomy to say, oh, well, the public system is like more expensive than the private digital systems, and therefore somehow get rid of the underpinning of the cheap system. Okay? And so an important thing to realize is that good things often do cost stuff. My jeans cost more than my cheap polyester shirt because they're better. All right? So actually many things that have costs, they have costs because they are useful and they have a reason. So this is like a sort of a mess thing to think about, because a lot of this cost of cash debate gets very sort of pedantic and sort of doesn't think holistically about how costs actually work.
Yeah, since I'm the retailer in the room, I can tell you quite specifically. So it costs about 7p to print a banknote. It's cost a little bit more to print the polymer that we use today, that used to print paper. But the idea, which Anne Jessop from Royal Mint is always promoting, that it will last forever. Well, guess what? We're printing a whole pile of them. The number of banknotes returned and destroyed because they're damaged, it's exactly the same as paper, because we're humans, we do weird things with money. We wash them, we tear them, like stuff happens. So they actually haven't saved anything. So the running cost of Royal Mint, they're quite shady about it, was about £250 million per year. So that could easily pay for the CBDC infrastructure. But the second answer here is that, remember, the cost of cash for the retailers is about 8.5% of turnover. It's enormous, because you have to take it somewhere, vans, security people. I mean, it's just a massive tax on retail. And the facts on the ground are that your generation doesn't use cash at all. So everybody buys online, cannot use cash for that. Everybody buys on mobile, so you have wallets, we could have CBDC wallets. So we're kind of halfway there anyway. But I don't think, just to dispel the worries, nobody's talking about removing cash. It's not even on the table. It's a parallel system that's not about removing cash. So the digital merchant clearance is about 2.5%. Handling cash is about 3 times as much. Sorry, Iza had a response.
I just think when we talk about costs, I think we have to be mindful of the fact that there is this assumption that digital is cheap, but digital is not cheap. And even if you have, at the point of introduction, a cost benefit study that finds it's beneficial and cost efficient to bring in digital costs are continuously escalating. Whenever you have a digital system, I don't even notice how many times you have to update your Apple apps, right? So there is continuous updates, continuous system patches, continuous sort of explosion of server needs. There's an economic concept called Jevons paradox, which is the cheaper something becomes, the more we use it, right? So there is this. I think that is number one. And number two is that there are other costs to digital, which is that it makes fraud much easier. And despite all the surveillance tech we've got, somehow fraud is not going down. I was on the team that brought the Wirecard story to fruition. Dan McCrum is a colleague of mine. That is one of the biggest frauds, and it happened in digital finance, right? It's not supposed to happen. So despite all the surveillance, despite all the KYC, despite all the ML, all the stuff we've been told for years is supposed to be making the system smarter, quicker, faster, fraud's not gone away. And by the way, now we haven't won the war on drugs either. As far as I can see, the drug dealers do quite nicely.
You talked about monetary sovereignty, and think you said central banks would panic if they started to lose it. And I'm just wondering if Facebook or whoever it is creates a really, really shiny, lovely African currency and everybody kind of moves over to that, either in one country or globally, like what's the impact that that could have on Bank of England, either their role or the institution, but also kind of how do you think they'd actually react? Like, what would they panic, but what would that panic look like?
So I think that's a very good example of that. This has already happened. It would happen on the Mark Zuckerberg's Libra project, and I'll tell you one thing, like in terms of CBDC development, nothing catalyzed it more than this threat from the private sector and the consortium of companies that Facebook brought together to launch Libra. And suddenly it wasn't, and the critique was bipartisan. Like it was over in the US, and I think AOC was against it, like the right wing was against it, everyone was against it, because nobody wanted to lose the sort of sovereignty of the national currency, right, or the dollar, the pound, whatever. And I think Zuckerberg had to acknowledge that and bow down, and he did, because he knew it was a political struggle. I mean, I wrote a very scathing editorial about it, which maybe Claire tried to take down, but never mind, about how, this was an attack. It was a private sector sort of attack on the private system. So we've had it before, and I'll tell you, I've been in very high-level central banking meetings where they've admitted fully well that this was the moment they realised that if we don't do this, if we don't provide a sort of national contender, we risk the private sector coming in and we lose control of the money. And I have a lot of sympathy for that, and I do think it's a fair point. But no system should be totalitarian. So I think, as I said, CBDCs should be out there, but they should coexist with the private. Let's bring it on, and best system wins. That's my view.
I just want to add maybe a nuance that often gets missed in these, because it became like a bit of a cliche to say that the reason for CBDCs was because of like these third-tier types of money, like stable coins and Libra, etc. Basically, Libra was a third-tier system built on top of the second-tier banking sector, which itself was built on top of the central banking system. All right? So you have these three layers. If you think about that structurally, actually those third-tier players completely depend upon the first-tier players. The main thing with Libra was the fact that it plugged into multiple underlying national systems to create a sort of new unit on top. And it had things like Facebook Messenger and so on that could be used to just plug itself into your world very quickly to get you to sort of forget about the concept of your national currency, even though structurally Libra does depend upon the central banks. Now the big concern was that, like, if you're flinging these units across the world, what's happening in the background? Well, is the Facebook team trading away your national currency, in some kind of like central banking operations with their traders, right? And so, I'm not saying that you're wrong about the concern, but I think we need to be careful about a lot of the sort of more shallow accounts of this believed somehow that those third-tier units would somehow be able to detach from the central banking layer, which is not true.
I disagree. I think it's true. Because, yes, Facebook came to market with that proposition, but once, if it picked up and it became the go-to, like everyone started using their Facebook Zuckbucks, eventually, like, it could, like, tether a bridge away from the collateralization. So in the beginning, yes, it'd be like, oh yes, in England we issue a Zuck pound, and in America we issue a Zuck dollar, right? But eventually you have this potential in the system on an international level to create its own numeraire, i.e. its own...
Why would it want to do that, though?
Because
well,
when
it doesn't get...
because like Tether, by the way, if you don't know, is a stablecoin, which was one of the original stablecoins, and it was supposed to be backed dollar for dollar by real currency. But what has emerged over time is that the component of dollars is going down, and the component of other unknown assets, which it determines under its own prerogative, is going up. And that is what happens is when you manage a stablecoin of any sort, as soon as there's a system shock, you have an incentive to either do your own credit creation, and that's where the risk comes in with Facebook, is that it would start providing its own credit and then become like backed by its own effective fiat eventually, especially when they brought out the robots.
Yeah, I mean, the original Facebook Libra or DM, I can't remember what it was called, was, they changed its model as well. Originally, it was meant to be like a basket of currencies and assets. And I think they basically realised they didn't really understand how the monetary system works. And the reason we don't all use Bitcoin today is because we like using one unit of account, which is used by everyone else. Money just tends to, good money drives out bad money. So they ended up coming up with what we now call a stable coin, where it's just shadows an existing national currency. And I think the risk is we're either going to get a stable coin or a central bank digital currency issued by the public. And because stable coins can outcompete private bank payment rails, the whole hype behind stable coins at the moment is going to act as a new digital settlement asset. That's what the government's trying to regulate from us. So then all of these new fintechs will be able to bypass the exclusive club of the banking system, people only with access to the central bank's balance sheet, and will be able to outcompete on payment services and innovation, supposedly. So I think either way, as things go, we're either going to get these new privately issued stable coins issued by non-banks, or we're going to get a public alternative of both, and I'd like a public alternative.
Wouldn't it make sense to just do a gyro?
Yeah.
Right, on that topic. Yes, we will come back to the questions. But just to summarize, sometimes to do nothing is the worst thing you can do. And we've done nothing when social media has eaten our local newspapers. We've done nothing when 90% of the advertising budget is marching off straight to Cupertino and to Facebook and Google. And as a result of it, we have no journalism left here. I mean, Isa is the last standing woman, but honestly, that is where we are. So by doing nothing on digital money, on digital central money, we will get eaten by somebody else. It's just who? Is it going to be a friend or foe? And that's the question for everybody. It's not if to do it, but how to do it the best. And I think that's where we need to turn the debate in. But there is a question here, sir.
Yes, so we've been talking about digital currency through the lens of digitization and automation, and it's of course a really important aspect. But I think one of the arguments for digital currencies we haven't mentioned it yet, and that's the ability to attach contracts or even policies to money or to capital, thinking money. And I wonder whether you could think of new services for citizens that these affordances would allow us to deliver.
So thinking money sounds very exciting, and
I've been
thinking money is also direct debit, so we have thinking money already. But it's also a pathway to demonetization, and I think that is the issue. All these tech utopians going on about how great it would be if, I could just have all this stuff automated. You neglect the fact that this is a pathway to prices being completely forgotten about, because once you have smart money in this shape and form, you are de facto making money less fungible, because the money is kind of entangled with the assets that it's tracing or helping to manage, and it takes us closer to a sort of God's plan system where, and towards that social credit system, where you have, you're clearing not through a price functional mechanism, you're clearing through a certain sort of contract specific, like did you meet the requirements of X, Y, Z? If you're an Uber driver, did you do your, specific hours in the car? If yes, you get, through the smart contract, your car opens today, whereas if you didn't if you were too sick or you need to repay, it gets really dystopian potentially. Obviously, there are ways to safeguard that. If we went down the smart money route, I think we'd have to really think very carefully about how we regulate it. But then the risk remains that fungibility becomes undermined, and if fungibility becomes undermined, then it doesn't matter really if you have cash or not, because unless you have like memory embedded in your cash, it's meaningless, because your data becomes money at that point. Everything, your entire personal life is what's being exchanged and cleared against, not money itself.
Yeah, I'm often quite sceptical of this programmable money, and I think at the end of the day, what are people trying to achieve, right? I don't think if you want to do, what is it you're trying to do with the monetary instrument itself that you can't do through other policies? I don't really understand how changing the way the money with its new functionality could actually improve things, other than I think it would benefit people who want to control what people can spend. And I worry, in our current society, that will be used against the poor. For instance, the idea people often like, you can give conditions on what people can use their benefits for, to stop them, wasting it on things that they don't approve of. I think that's a very dangerous path, and I think it's not necessary. We don't need to change the monetary instrument to meet social policy objectives.
But it's a little bit of myth that we have monetary equality. Like we have loyalty systems, loyalty points, which are really favoring people who spend more money. The more you spend, the less you pay. If you use Tesco Club Card and spend hundreds of pounds, you will get better prices than the poorer person who only spends a third of it. So there is already weird stuff going on that favors people with money. And I think we should be innovative enough to give the benefit for people who have less as more.
Going out and being involved, I'd be interested to know the diversity in all of this and how people like me, how this new system will serve me. Currently, the system we have doesn't serve people like me. In diverse areas, in fact, banks are closing it down. So, standing here, I really don't see diversity out there. So, what are you going to do about that? So, that's the race question, and then also there's the age question. What have you done surveys with young people, and are they going to buy into this? Thank you.
So what I would want is you to come to this roundtable I'm organising tomorrow with the Treasury, where I've been trying for the last few weeks to get some more diverse voices involved.
I just want to say that this is why it's so important to preserve the neutrality of money in the digital system, because when you go into that's what we're talking about, smart contracts and conditionality imposed through digital contracting, and data-based value, essentially, which never forgives, because these systems, remember, we have statutes of limitations in law, but when it comes to data, your footprint from what you did as a kid stays with you potentially forever, right? And that's why I'm very much against this. Any CBDC design must be private, and there is a problem and a paradox, because the government is like the very entity that is enforcing know your customer and AML legislation. So as an issuer of currency, digital currency, it can't be seen breaking its own rules and not doing KYC. They're coming up with all sorts of different kind of tiers to allow some lower level, small threshold that is allowed to be completely anonymous. But as as is becoming increasingly obvious, that's not actually helping KYC, AML fight crime, because the small components can be easy, and criminals find a very easy way. They're very innovative, and they find ways to kind of aggregate very small transactions. So it's not really the threshold thing. I don't really buy it, and it still stops you from purchasing larger things with cash if you have to. And so that's my main concern, is like, if we move into this system, will the KYC, AML, and combined with an AI, which AIs are like, at the moment, you know, goodness knows what an AI is going to presume about anybody, like, you know, so I think we have to be very careful, we have to maintain privacy, and we have to maintain neutrality.
Yeah, I think that's that goes without saying. But I think there is one answer. So the advantage of CBDCs as it's formulated by the current proposals, and they're pretty early, is that people currently, if they have money in their current accounts, they don't get interest. You have to park money for a substantial period of time to get interest. For people at the lower end of the income, that's not really a proposition. So by definition, the CBDC as issued by Bank of England, current accounts, will carry interest, which is a good thing. So they have an element of inclusion already pre-programmed in, and we just need to look at how the details will be defined. But at the moment, no current account on private bank in UK will give you interest-bearing account, while the Bank of England would. And you would have nice sort code, 000000.
Maybe a question to John, because John, you know how expensive it is if you, were you in government, would hand out £100 support to every single citizen in this country. So you know the huge amount of cost. So it's very difficult to focus support for exactly these groups that you have been mentioning. Just on the cost.
Yes, okay. Let me read this. I'll read this with a bit of a sigh, okay. It's a press release from me on the 31st of March 2019, when I was Labour's Shadow Chancellor. And it says, John McDonnell has announced a radical shake-up of the UK banking system to provide the long-term funding needed to prepare our economy for the future, supporting communities neglected by the finance system, and kickstart Labour's green industrial revolution. The sister is from Ealing North, just up the road from me, so the policy was developed as a result of work in local communities with the CWU trade union and others, positive money. Everyone got involved as far as I can remember. And the idea was, how do we overcome this initial need for the infrastructure being put into place? And basically what we said, we'd plan to build a new public banking ecosystem so finance works for the many, not just a few. And we were going to set up a post bank. Does this sound like Gyro? I was a Gyro bank member. And we were going to set up a post bank. And the idea was looking at a Gyro type arrangement, but also because individual communities came up with this time and time again, was that the post bank would be based on the post office network at the heart of our communities. And then, of course, we were going to set up the National Investment Bank to support businesses, but also particularly local authorities and the development of the Green New Deal. So actually, it sounded radical at the time, but it wasn't particularly. It was almost reverting to a combination of gyro bank, but also a form of accessible banking based upon existing infrastructure, the post offices themselves, which people are used to. And what was coming back in the consultations that we had in communities like ours, people trusted the post office bank. They trusted the idea of going to the post office or having a digital relationship with the post office. So that was my sort of covert, underhand way of trying to re-establish the gyro bank in some form. They must have discovered it. That's why the conspiracy. That's why we didn't get elected.
I wanted to ask a little bit more about the privacy of this. I get everyone seems to think it could be a problem, but I would like to ask if there are any solutions that anyone can kind of give, because I think that it's true about the whole drug dealers will still be drug dealers, that they're probably not going to be too affected by this, but like the general consumer, I don't know whether it's necessarily right that the government is tracking spending, whether it be someone on benefits or someone who's just still working class. middle class, anything. I think that it can change taxes and all of that kind of stuff, just solutions.
Yeah, so I think what we need is a digital version of cash, which actually replicates the key features of cash, which is a bearer instrument, you don't need an account. So what's sorry, so it's an example of what it could look like, a prototype I got from a company, but it's essentially, this card wouldn't be linked to any account, but it would hold the money on it as a bearer instrument like cash, and so basically once the Bank of England has issued the money, it can no longer have any control or see what happens to it. Same with cash. So there are technological designs currently being worked on for how we could do that. This is something we're keen to advocate for. And so you can have that as well for like smaller transactions, but you can also have your digital pound-like account, which you hopefully might be able to get interest on or invest in stuff. But that's to be decided.
One of the reasons that the card is being worked on, because there is still about 7% of people in UK who don't have access to digital transactions, who don't have laptops, who don't use mobiles. And that probably is an amount that has not really shifted over the last few years. So this is the long tail that we just have to take care of and support that population with a solution. But there are solutions in the card, which at the moment is tested, it's called Whisper Card. But there are others. We'll take care of it because every year we do this digital index with Lloyds Bank, and every year the same number comes back. 7.5% still does not use digital payments. So that's, I think, is where we are. But nobody's trying to take it away. In fact, there's a lot of innovation. But I guess it's a quite bigger issue here that the privacy depends how we understand it, because we have very little privacy at the moment. Because current private banks that Isa adores are proxies of the state. They operate in a very, very tight licensed environment. They will do as they're told. If they're told to stop somebody's money, they will. And we know that they do. And over the period of Russian war, thank God, they were able to do it to some nasty people, but sometimes they make a mistake. And as a society, we have to have a ways of talking about it and figuring out where it lands. But the country that lives and prays to NHS and believes in centralization of NHS, where everybody pieces of data of every smear test is on it, and every sexual disease is on it, yet we trust the system that that's not going to end up in Daily Mail. So it's not beyond the wits of the men to have that grown-up conversation. Do we want strong bank which will invest in growth and will belong to all of us, or not? Are we grown up or not? So I think this is what I'm throwing out to you, because we are talking about details. We have an opportunity of a lifetime to do something really interesting, to be collective about things. We have forgotten how to be collective. We're just sitting there scared in the corner. This is an opportunity. But maybe the younger people, there's a couple of guys there, you had a question there. Sorry.
Can I add something to this? Can I add a controversial opinion that will very seldom be put out into public debates? One of the things that's not talked about in these digital money debates is that there's actually a strange tacit balance of power that's been going on with the banking sector and the cash system for a long time. State authorities are well aware that the cash system is used for a certain amount of illicit activity, all right? But this is a trade-off in society we're prepared to accept for the benefits the cash system brings. One of the big concerns when the cash system goes down is, well, on the one side, if you have this total surveillance type society, then there's always privacy concerns. But what can also happen is it spurs a parallel digital market of all these new digital black market instruments, right? Which creates actually a proliferation of new forms of cybercrime and new forms of digital crime, as it were. So there's actually an interesting thing. The cash system, in allowing certain amounts of black market activity to happen, this is a hard point to make, but it's actually an important function of the cash system, right? It's actually quite hard for a criminal to use the cash system because it's slow and physical, whereas the digital systems are incredibly effective to use for transnational types of digital crime. And so one of the interesting debates is happening in the CBDC realm, and actually Edward over there, and there's various other people who are much more on the sort of technical side of how do you actually build out sort of cash-like equivalents, these digital types of payment systems that act like cash, is also around, for example, could you do a type of instrument which limits the amount of usage but provides privacy, right? Because the big concern for the big financial or the central banks is that if you allow an unlimited amount of anonymous digital currency to be used, you've got a huge cybercrime problem and a huge international criminal problem. Right? But if you have these sort of bearer instrument type things, for example, like the e-cash proposal in the US, which is trying to promote these sort of small scale bearer instrument types of digital money, it actually provides the benefits of cash without enabling sort of transnational crime elements.
As I've been positioned as the bank shill, I feel that there needs to be some balance. I think this is all very, utopian in mindset, because the reality is it would eliminating the banking system actually make productive loans? I think we've got lots of examples in history where we know that's not the case. I'm Polish, that was definitely the case there. I think, I'm a pragmatist, and I think fundamentally the idea that, what you're suggesting is banks only create money by existing assets, but that creates a price effect, right? So if you're lending to buy mortgages, to buy existing house stock, house prices go up, that should incentivize new build. The question is, would a CBDC? Yeah, it should. If it doesn't, there are other factors in play, whether it's permissions and planning and goodness knows what else. But frankly, if house prices go up, then the market, if it's working, should be encouraging new development. That is how it should work.
Okay, I think we start wrapping up at this point. There is loads of more questions to ask and lots of sentences from
I mean, let me be very clear. I'm a pro-cash advocate. My main thing is to promote cash. And so one of the concerning things with the CBDC debate is that insofar as the CBDCs can be promoted, it mustn't be used as some kind of wedge to undermine the cash system. Which is, cash is the public bicycle system of payments, right? So you building out this public alternative as a viable alternative to digital systems. Now, within that digital section, we can talk about whether we want the banking sector to control it or there to be a state component as well. But you need this physical digital balance of power as well. And that requires a cultural and political movement to work and to be built around this.
There might be inevitability about some of this, so we have to plan to ride a number of horses. I spent the whole day in the chamber on the Digital Markets Composition and Consumer Bill. Yes, none of which relates to the finance sector whatsoever. And it just shows you how far legislators are behind the curve on all of this. But the purpose of debates like this and discussions like this, and we're going to have to do this again, Richard. Richard Barbrook is the person who stimulated this. Thank you very much, Richard. We're going to have to do this all over again, because the purpose of these sort of discussions is to start bringing people up to date on what the next steps or options are and what needs to be done. And that does need a role in government as well.
Absolutely. One universe, we all agree, cash needs to be preserved, and CBDCs, as long as they're private and focused on privacy, that is the key thing. So whether that is achieved or not is another question, but I'm so glad that you're taking it.
But we will continue the conversation, John, I promise. As we can see, this is a really complex question, and I'm very proud of everybody staying with us and
Thanks, Richard. Well done. Putting this together. That was great. We'll do I've got to dash. I'm
okay, thank you so much.
No, thanks for this. That was great. That was really interesting.